On Saturday, the 30th September 2023, just gone 11:14 a.m. Chicago time. Do hope you are doing well. So it's the weekend and time for another weekend futures market recap. We'll go through 15 of the largest futures markets and I show you what I'm seeing on my charts. Do hope you had a good week's trading. I certainly enjoyed it. Nice ranging days every single day, decent ranges, decent volumes, nice trending moves, all kind of good stuff for day trading. The question is, have we done enough testing? If you'll recall in last weekend's video, it was all about saying, I think this week's going to be a testing week. We're going to be stuck in a range a little bit, going nowhere, but pushing the highs and lows just to see if we've done enough damage on the downside for us to be able to converse and change trend. This weekend, I don't think that we've done that, and I'll show you why on the E-mini charts when we roll through those daily all the way down to the tip bar charts. I think we've got to have one more final move into those lows with big volume, big flushing out patterns. And probably it's going to be associated with the US government shutdown. We're getting news of that this weekend. That's likely to happen Monday, Tuesday. So let me show you the charts. We'll start with the daily chart of the E-mini. This is the traditional view of the better indicators with two panels side by side. Everything to do with volume on the left-hand side with better momentum, a volume-based momentum indicator beneath the price bars. On the price bars themselves, we have better Pro-Am, which uses the average trade size to identify professional and amateur activity. Professionals are in blue and amateurs are in yellow. On the right-hand side, everything to do with price. This is based on better sine wave, which calculates the cyclical activity in 3 different time frames, allows us to plot support and resistance lines in those time frames, and then breaks of support and resistance, breaks it into uptrends and downtrends. When the background is printed in red, it means that we're in an uptrend in terms of volume and price. And so this is why I've been bullish ever since September, October last year, is that we've been broken into this confirmed uptrend in terms of price and volume. And you can see we've still got that with the background here on the daily chart. It's just a question of we're having a move off exhaustion buy and bearish divergence, Rambo patterns at these highs. We're coming in to test those lows, and it's a question of where that support is going to come from on this drawdown in order for us to take off again. And what we should be looking for that'll catch this bottom is cyclical patterns, momentum patterns, and professional activity. And we've been talking about a confluence here of cyclical patterns going on where we've got support on the lowest and the intermediate time frame all coming together. So these super thin lines are the lowest time frame with the fast and slow line, red and blue. And then slightly thicker lines here, red and blue as well. That's the intermediate time frame, all crossing and coming together. That means we're likely to get a cyclical support on 2 different time frames at the same time. And that's pretty important. We're also coming up to a momentum pattern down here. The levels that we had at these highs were about 5 million or so on the daily chart, and we're down at negative 4.7. So I don't know, do we need a final burst down of selling activity to get everybody freaked out, from which we can then reverse and the professionals can use that high volume, high volatility, just freak out type day in order to reverse positions and take off. So, but we're getting close in terms of those readings. On the downside though, no blue professional bars stepped in for this trailing stop on better Pro-Am to be able to trail this up to that level. So we haven't seen those on the daily chart, which means we've got to wait. But let me just show you on the NASDAQ, because that double support on the intermediate and low time frame has actually gone off. So this is same chart, daily chart, the NASDAQ futures here. And you can see we've got an end of trend and a pullback at an uptrend level. And so what's gone on here is we've had a little bit of a downtrend, break into a downtrend on the lowest time frame. As soon as we got through that support, we go back and we make a pullback in a downtrend pattern, resistance there. We come down and we also have a little bit of a cyclical low here when those cross that marks an end of trend on the lowest time frame. On the intermediate time frame, we've been busted up into this uptrend as soon as we got above that intermediate resistance level there, this medium thick line here. And so what we've had here is a move down to a intermediate support level, which is a pullback in an uptrend. It's a pullback in an uptrend because it is above the breakout level. So that's the definition of what we have. Yep, momentarily we've broken down below this trailing support on better Pro-Am because we had a blue professional bar come in here. And so we're in the dark. So on the NASDAQ chart, we're not in a confirmed uptrend at the moment. We're having a little bit of a retrace. It's dark because the background is in black. That means one or other of these volume or price indicators has gone into a downtrend. So that Price bars are in red, meaning they're still in an uptrend. However, we bust below that trailing support on Beta Pro Am, which means technically we're in a downtrend. So when the two indicators are not in sync, we're in the dark. But one of the most useful signals that I can point you to is what I call an SR2 in the dark. And this is support or resistance in the intermediate time frame. So SR2 being the intermediate time frame, SR1 being the lowest time frame, SR3 being the highest time frame. That is an intermediate level support in the dark here when we don't have confirmation. That is a very interesting signal point. You can take a trade based on that with a stop just marginally below the low of that. Whether that'll hold over the next couple of days, I don't know, but that's interesting for me that we found this support on the NASDAQ chart, an SR2 in the dark trade. It's not come with Exhaustion Sell, it's not come with blue professional bars or even amateur down bars testing there or so on. We're simply dealing with the cyclical pattern here, but it's interesting it's coming on the NASDAQ chart first. So let's go down through the time frames, see if we can see any other signals coming in. 135-minute chart here, and you can see the professionals have started to come in here, but it's come with exhaustion buy, not with exhaustion sell. So we popped out here with flushing patterns, and this was a big read, and that is when that happens before an exhaustion sell pattern, that is short covering. So that shows that over the last couple of days we triggered a lot of stops that were trailing stops on this move down, and that's caused short covering rallies. So quite a large amount of volume has been busted out of short positions at that point, and that signaled a short covering rally exhaustion. It was a big read on the 135-minute chart, but on the 135 we've not gone down to see exhaustion sell, and these blue professional bars have happened on the retrace, not on the way down. And in the background here is in grey, so the 135-minute chart, we're technically in a downtrend at this point. We're coming up to a cyclical support on the highest time frame, but you have to see a pullback to end of trend. We have to see a bunch of things going on and an exhaustion pattern there. And I wonder if this news, the shutdown, is going to cause that capitulation type activity that we might see Monday, Tuesday. So on the 45-minute chart here, you can see the blue professional bars start to get going here, and they've come in on the retrace as well. They're not on the way down here, and we don't have an exhaustion pattern down here. So again, just showing that short covering activity going on. But at least we've had support on the highest time frame here. We've got to put in our pullback to end of trend on the lowest time frame. That has to work itself out, and I'd suggest that we probably have to see an exhaustion pattern on the 45-minute chart as well. And then the 15-minute chart here. This week's activity is marked by the solid yellow lines on the 15-minute chart and the 13,500 tip bar chart. You can see this week's activity. So we got a bullish divergence pattern here, and then there's that exhaustion pattern. That's the short covering rally that goes on. For me, what I'm wondering about, we have two exhaustion sell patterns here. Was that exhaustion sell volume getting this move going? They were capitulating out here at this position, getting the move going. And there were two in a row that were fairly close together, and then the bullish divergence is referencing off this exhaustion sell. I don't know, that for me, it's quite a long ways away in terms of points from where the exhaustion happened. So I wonder if we're going to have to see an exhaustion pattern after this short covering rally, bang, that comes down and breaks through the 42.77 low. We've still got pullback to end of trend to put in here on the 15-minute chart, and we're in a downtrend. So until that's put in, I just don't think we're done on the downside, and there's no blue professional bars came in at those lows on the 15-minute chart. Now, 13,500 tip bar chart was a busy week because the beginning of the week is marked all the way back here, and you can see here we continue to press down and down and down, but all the exhaustion patterns happen on the upside, and that's short covering activity. We're triggering stops every time we do that, and we're rolling round, and we haven't seen blue professional bars on the lows here or here or here. I like to think that the professionals are actually triggering those stops and causing that short covering rally, because they get the move going here, a whole sequence of blue professional bars push 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 into where those trailing stops are. They get triggered, bang, and we can sell off again. So yeah, the last blue professional bar series we had here, it's a stair-step trade on the way down, having maxed out exhaustion buy, bearish divergence flush, amateurs getting wrong-footed here at the highs. We've come down. So again, momentum-wise, we need to see exhaustion sell patterns down here. And when you look at that exhaustion sell that we were talking about on this 15-minute chart here, How far away was it from where this low is? You can see it's miles away. It's back there. That was getting this move going. That was showing the capitulation volume. So I think we've got to go see an exhaustion sell signal, which means some fireworks on the downside on the 13,500 tip bar chart, the 15-minute chart, and so on. So there we go. That's what I think I'm seeing on my charts. But with these testing days and weeks, the professionals are pushing you out of positions. I'm not holding any positions overnight here. I've just been day trading, looking for 10, 15 point moves with 10 point stops. And then if you can identify when that big trending move takes off to the downside, you can pick off more than the 10 or 15 points on the way down. That can be a really nice healthy trade if we can get it identified. So there we go, some thoughts on the E-mini. Let us look at the triple signals on each of the futures markets, and we'll start with the Forex markets with the Euro first. So at the end of last week we had, and the last couple of weeks we've had triple signal short, bang, 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 and led to a really nice sell-off here at the E-mini trade, and we're down at 105.5 here with the Euro. But no blue professional bars at the lows. The trailing stop is miles away, and we're coming back down again. So the Euro's weak, heading down, I would suggest, until we see those blue professional bars. British pound, this signal was a spurious signal. We talked about that in previous videos, but in the last 2 weeks we've been heading down and down and down, but with no exhaustion sell down there. Yep, some blue professional bars here, some on the retrace, but no signals. Let's go long on the British pound yet. Aussie dollar though, Aussie dollar interestingly had a signal long this week after a real shock move down. Exhaustion sell, bullish divergence, blue professional bars, oversold with a background in red, and that as soon as we break the trailing stop on Better Pro-Am gives us a triple signal. So that was a classic. Everything happened nicely, close together. That's what we like to see with triple signals. We raced away. We haven't seen blue professional bars at the highs here, so the trending move is not over. So we've got to see this trailing stop broken before that breaks back into an uptrend. But interesting that the Aussie dollar was doing pretty well. And Japanese yen's just been in total free fall. I was looking at it at 70 cents thinking maybe that was a level it might hold, and we're down at 67 3/4. So this thing is just falling apart. So one day this is going to bottom and we'll have a decent signal, but I'm not sure this is it on the Japanese yen. E-mini, this is the 13,500 tip bar chart. At the end of last week I was saying we're still going to test because cyclically we hadn't reached the right levels yet, so we had a couple of long signals at the end of the last week, but they didn't really work out. This week we've got, at the end of this week, a short signal based on these exhaustion buy bearish divergence patterns getting overbought and starting to break down with a bit of a stair-step trade into the close on Friday. So we've got a triple signal there on the E-mini. And 10 years. 10 years I thought were looking good at the end of last week. They were starting to hold. We had some blue professional bars, but it went nowhere. Continued to break down, bang. And now we're into more damage on the downside. Exhaustion sell, bullish divergence. Couple of blue professional bars, but not a heck of a lot. Let's see if this retrace and a whole bunch of blue professional bars stepping in there actually manages to hold and we get a little bit of rally in the 10 years this week. Then precious metals. So gold, whoa, collapsed this week, and we got no signals midpoint last week because there was no exhaustion buy. Yes, we had our overbought. Yes, we had blue professional bars. We broke the trailing stop beautifully like that, and then this is the stair step trade here where the blue professional bars step in. Stair steps all the way down, and now we've got the reverse setting up on gold. So we're down at 1860s. And here we've got some blue professional bars, exhaustion sell, bullish divergence, oversold in the background. So potentially that's a reversal happening in gold, but pity the system didn't pick up a nice short signal at those highs. Silver, what do we do? Silver, look at this, unbelievable. Blue professional bars into 2380 and then it collapses down here. But good news is exhaustion sell, bullish divergence, a whole bunch of blue professional bars oversold. We need to break back above the trailing stop, and that could be a good signal there. Actually, silver did signal short last week and short at the beginning of this week because we got that exhaustion pattern there, so that's good. But this was a bad signal, a spurious signal, because we didn't have blue professional bars at the lows, and this was exhaustion sell getting the move going. So that isn't a good signal when it happens after that move, retracement move comes in. So silver, Bitcoin is also looking a little bit strong this week. So last week we had blue professional bars, exhaustion sell, bullish divergence, and it wasn't until midway through the week that we get primes broken. We get a signal, 3 signals in a row here, which is interesting. So Bitcoin looking a little bit stronger at 27,000. And then crude. Crude, I think we're done on the upside. When I look at all the blue professional bars on the higher time frame charts, crude, the 460 minute here, exactly 3 bars in a day session of crude trading here. And here between 90 and 95, we have a whole bunch of blue professional bars stepping in. We do not have exhaustion buy. It is overbought. We've got a trailing stop there, but that's a lot of blue professional bars cut those highs. They've been happily bought in down at 65. Held and held. They caught this retrace here. That was the flash crash day. We have no blue professional bars until this week's activity. So I think that's pretty significant up here. So I think we're done for the time being on crude in terms of moves to the upside. No signals for crude at the moment. But for gas, I did have nice signals this week. We had Exhaustion Sell, bullish divergence, blue professional bars, and some triple signals go off at 280. So that's interesting. At the end of this week, we've got a short signal though. So couldn't get through here. Blue professional bars kind of down there. It's not a classic because we haven't seen blue professional bars on the rises up. So let's see if we get a little bit of a sell-off that then comes back to go through $3 on natural gas. Copper last week was destroyed. You can see based on that triple signal 2 weeks ago. Bang, bang, bang. And then down here at the lows, found support at 260. Blue professional bars come in here and we've raced away. It's a nice move, but we've not got a triple signal there because we had exhaustion buy in the way. So that's a shame on copper. But copper's going up. Now, the ags are interesting because they're going in different directions. We've got corn that I think is looking pretty interesting. So this is 2 weeks ago we had signals long into corn and we had a little bit of profit taking it 488, but sold off here at these levels. Let me show you the corn chart on the daily because that's pretty interesting. This is 167 minute chart, exactly 3 of those bars in a day session of corn. Down here at the lows, we have blue professional bars step in. We've got a triple signal go off. Now the last bar is pretty nasty down, but if we get some kind of hold in this move and we start breaking up through 496, that's interesting for corn on a longer time frame chart here. But all the other ags look pretty nasty at the moment. So soybeans had a little bit of strength, ran into trouble. We've got a signal short at the moment on soybeans. And wheat, same thing. Wheat got destroyed. Signaled 2 weeks ago, and then it's continued down and down and down. And when we look at those on these daily charts, they're looking pretty nasty here. You can see this is wheat on that 367 minute chart here. Blue professional bars coming at 800. Sell it down, and there's a really nasty day on Friday on wheat. So we've not put in that exhaustion pattern yet on the Emini on the downside to bottom this and turn it around. So let's look for that early this week. But if we get that, that could be it on the downside. That could signal that this move testing into these lows is over, and that we're going to strengthen from there. So should be an interesting couple of days trading at the beginning of this week.